Welcome to Pro News Weekly. Let's dive into the latest updates from the financial markets. The US dollar continues its uptrend, stock indices are retreating, gold is ignoring good news, and Bitcoin is returning to a crypto winter. The US dollar has risen for 3 days in a row amid escalating conflict in the Middle East, strong US economic data, and increased odds of a Fed rate hike in 2026. Iran's attacks on Kuwait and Bahrain are casting doubt on claims that the ceasefire remains intact. Instead, the conflict appears to have shifted into a lower intensity phase, rather than coming to an end. ADP's private sector employment growth of 122,000 and an improvement in business activity in the services sector suggests that the US economy can withstand higher interest rates. Combined with high demand for safe haven assets, this is allowing the USD index to rise. The S&P 500 has broken its longest daily winning streak since 1995, amid fears that the conflict in the Middle East will slow global GDP to its lowest levels since the pandemic. The OECD made this forecast on the assumption that the Strait of Hormuz will remain blocked until the end of 2026. US equities have long been ignoring geopolitics. Markets were boosted by late 2025 monetary stimulus, Donald Trump's tax cuts, positive corporate earnings, and the hype surrounding artificial intelligence. However, the S&P 500 rally now seems to have hit a wall amid higher inflation and Treasury yields, as well as slower GDP growth. Gold is retreating due to a strengthening dollar and rising Treasury yields. Even reports that the share of central banks' gold and foreign exchange reserves grew from 20% to 27% over the past 12 months failed to help. According to the ECB, Treasuries accounted for 22%, other dollar-denominated assets for 20%, and the euro for 15%. Gold's gains were more driven by the rise in prices by more than a third over the reported period, rather than to central bank purchases. Bitcoin has plummeted to its lowest level since February, amid the first $2.5 million sale of strategy tokens in many years, and the largest outflow of capital from specialized funds. ETF holdings have fallen by $4 billion over the last 12 trading sessions. Investors are moving money out of cryptocurrencies and into technology stocks, as digital assets have struggled to meet expectations. As a result, Bitcoin's correlation with US stock indices has started to break down. While the Nasdaq 100 has risen by 41% over the past 12 months, Bitcoin has dropped by 38% over the same period and is now 48% below its record highs from October. The key events on the economic calendar for the week leading up to the 12th of June will include the release of US inflation data and meetings of the ECB and the Bank of Canada. Against the backdrop of a stabilizing labor market, rising consumer prices could prompt the Fed to tighten monetary policy. The absence of a deal with Iran continues to support higher oil prices, casting doubt on the White House's view that inflation will prove temporary. Markets expect the European Central Bank to raise its deposit rate from 2% to 2.25% as Eurozone inflation accelerates to 3.2%. Nevertheless, Christine Lagarde is likely to express caution about further steps towards monetary tightening, which will limit the euro's rally. Keep up to date with global market developments with Pro News Weekly. Like, share, and subscribe.